Everybody, it is Friday, the 6th of September, and September is off to a rough start here. Semiconductors down 11.5%. The biotechs are down close to 5%. Russell 2000, NASDAQ down over 5%. Ethereum down 11%, which is now down year to date. So let's take a look at these charts and make some sense of it. Uh, the S&P 500 undercut the anchor from the August 5th low. So the things that I talk about all the time are number one, most important. If the market is below a declining 5-day moving average, you simply don't want to buy that market. And when I talk about a market, I mean an individual stock as well. If you've got a stock or the S&P 500 or whatever it is, if it's below a declining 5-day moving average, it's considered guilty until proven innocent, and it's foolish to be a buyer. I've been repeating that all week for Alpha Trend subscribers, and I told them earlier in the week that my main job this week is to try to keep them out of trouble and help them to not lose money. We did have some short ideas, but we actually made some more money on the long side, which is kind of intriguing. But we look at the anchors from key levels such as August 5th and say that's a level of interest. What a level of interest means is it does not mean is buy it if it touches it. It never has meant that. I've never said that. I've never implied it. It means that's when we want to take a look when it's touching that level and say on the shorter term time frame, is there any evidence now that the buyers are gaining control? So if we look at this was probably approximately 543 and a half. Let's look at a 15-minute time frame. And at 543 and a half, the price was basically right around here, let's call it. There was zero evidence the buyers were gaining control. In fact, actually, it's obvious where that level was. It's this number here. So there was no buying in there. Instead, we just continued lower. We were below the daily volume weighted average price, which means for today, you don't want to trust rallies. And that's why that rally up in that area failed quickly once it did that. So going into next week, this coming into this week, we were looking at 554 and a half as the key level. If it held above that, we were going to give the benefit of the doubt to the buyers. But we said we have a declining 5-day moving average. And if you recall, I was talking about the nuances of the 5-day moving average last week, saying just because we're below the 5-day moving average doesn't mean we want to get bearish, not if we continue to hold this support. But once that support breaks, then that is a confirmation that the sellers have regained control. And we saw a very clear pattern of continued lower highs and lower lows throughout the week. So there's no sense in being a buyer here. It's possible we're headed for the anchor from the April low. That would bring us down to this level, which we'll look together is about 535. Let's just call it 535. If it got down to 535, I wouldn't stick a bid in there because you're just blindly trying to buy into a perceived level of potential support. Just like the anchor off of the August 5th low was potential support. We wanted to be aware of it, just like we wanted to be aware that the market seemed to be holding the 50-day moving average, but it wasn't holding up and buyable because we're below declining 5-day moving average. I say it constantly. Some people are just getting the message, it seems. I'll continue to say don't buy the dip, buy strength after the dip. I was saying that over here last week and this week, and there's still no reason to be a buyer. We're below a declining 5-day moving average. We've undercut the anchor from the August low. We've undercut the anchor from the April low. Looks like we're headed for a test of the year-to-date anchor and the 200-day moving average. That wouldn't surprise me at all. And just because we touched that, I wouldn't be a buyer, just like I wouldn't have touched the year-to-date anchor right here. It's a level of interest to look at on a shorter term time frame for evidence that the sellers are losing control, the buyers are stepping up, and there's support that's formed, and then buy as the market moves away from that support. It means the same thing all the time. Doesn't matter how many times I say it, it doesn't change. The Russell 2000 also, we came into the week guilty until proven innocent. We leave this week guilty until proven innocent. Lower highs and lower lows below declining 5-day moving average. We touched that anchor and bounced, but did that bounce materialize into anything? Did it change the pattern of lower highs and lower lows? No, it did not. So we don't buy there. That's not why buy strength after the dip means. It means wait for that 5-day moving average to flatten out. Let some other people get burned trying to pick the bottom, and we'll wait until it's safe. We want to keep our money in the things that are moving. The semiconductors are now below the year-to-date anchored VWAP. Once again, they're on the 200-day moving average. We can take a look at the anchor from the October low, and that's basically where we found buyers on this previous dip. So maybe this is going to be a level, and we can look at it and say, and you might look at it and say, hey, that is support. I will tell you, nobody knows what support is until after the fact. If we get a bounce here, you can say, sure, there was support there. But if we get a bounce, is it going to turn into something like this and then continue lower? We have a declining 20-day moving average. We have a declining 50-day moving average. Those are not good times to be long. We have a declining 5-day moving average. It's not a good time to try to be a buyer. Maybe it stabilizes next week and gets a bounce, but we've got to continue to express caution because we're well below the year to date high. And maybe we run up into this downtrend line, and that's what causes it to run into further trouble. We're not out of the woods yet. Don't think just because they're down that they can't continue lower. Biotechs, from failed moves come fast moves. And that's exactly what we saw happen last Friday. We saw that break and then it got pushed back in. And now this week we see indeed, it was from a failed move higher, came this fast move lower. There was no reason to be a buyer. Once it broke that high and then pulled back in, it means if you're buying this breakout, get the hell out as quick as possible because we've still got this pattern now, lower highs and lower lows, below a declining 5-day moving average. We're going to keep that blue anchor on there because that's the month to date anchored VWAP. And we're going to keep that on the SPY. We're going to keep that on the Qs. We're going to keep that on the Russell 2000. And again, back to the semiconductors, we're going to keep that on there as well. So the biotechs, they remain guilty until proven innocent. You can look at that weekly chart all you want and say, wow, there's just so much potential there. And potential doesn't mean results. Potential means it needs hard work. It needs to put in the time, and we need people to step up and buy these stocks and provide support. It's not our job to provide the support to try to create a bottom. That's the job of the institutions with the billions of dollars to put to work in the market. When we see it below the declining 5-day moving average and it breaks support, if you're still holding here, you're either trading a different time frame, you've got your head buried in the sand and don't want to admit you're wrong, but the market is telling you you're wrong for holding these stocks right now. I'm a swing trader. Everything I talk about is a swing trade time frame. If you're a long-term investor and this is part of your plan, that's great. Continue to do what works for you in your time frame. Financial stocks, we finally saw this group, which had been making this beautiful pattern of higher lows in here. I had kept suggesting raise your stop under these higher lows until right here. This was the perfect time. That was the correct time to sell the financials. Everyone says, well, when do you take profits? When the pattern of higher highs and higher lows is no longer in existence. That broke down right here at that point exactly, and it's done nothing but go lower since breaking that level. Now, longer term, we're still in a beautiful uptrend on the daily time frame. We're just backing off of all-time highs on the weekly time frame. But is this going to be a pullback? I'm not going to buy the dip. I want to buy strength after the dip. As you know, I don't buy the financials, but if this were a different market, I would be looking to buy strength after. Bonds continue to be the place that is attracting money. They got a little bit ahead of themselves in the last couple of days, but they did exactly what we spoke about, which was the pattern of lower highs and lower lows was broken. The stock flattened out at the rising at the flat to declining 5-day moving average, and then it made the higher high above the flat to rising 5-day moving average. This was the correct spot to buy the financials with a stop under here. And now you've got to decide, do you put your stop under this higher low, under this higher low, or maybe you sold some. And if you're not long, I would say the key for next week with these the bonds is to let them settle in a little bit. And they got a little bit ahead of themselves. Like I said, from 97 to 101, that's a big move for bonds. So maybe they need to do a little bit of this, test that 5-day moving average, and then get going. So we might want to draw an anchor off of this peak that would come down like this. And then another lower risk purchase would be here. Not, and you might be able to get a lower price if you're trying to buy the dip. But over here, you don't have the uncertainty that the sellers are still in control. I've been saying it for weeks and months that the energy names are a mess. Leave them alone, and they continue to be a mess. They broke down through support here. No reason to be a buyer of those. Let's take a look quickly at. This was that. In here, this just makes it absolute so easy to see. When we're below that declining 5-day moving average, it's red. This is the SPY, that's the Qs, that's the semiconductors, and that's the biotechs. We look at these potential levels of support, the anchors from the prior lows. but we don't buy when they're below declining 5-day moving average unless you want to lose money, which I don't think you'd be listening to me if that's what your goal was to lose money. The Bitcoin is down to the low from September of last year, and this had held that prior flush, but the pattern is still very clear in these in Bitcoin is that we've got this high and we've got a lower high and we've got another lower high. We've got this low and we've got a lower low. Are we going to make another lower low? It doesn't really matter to me because the bottom line is we're still under pressure here and there's just no reason to be a buyer of Bitcoin at this time.